Welcome back to Crypto Asset Catalyst. Good to see you again. Everything we are seeing today, some of the macro dominoes we've been watching, they're finally starting to tip. Brent crude just touched $99. Japan is holding rates at 0.75%, and the yen is hanging around that fragile 160 per dollar level. These are the early signals we've talked about for months. So today, we're breaking down what's already happening, what's building next, and why XRP's real utility, plus its shrinking true supply, makes this such a powerful setup. Disclaimer, this is not financial advice, but for informational purposes only. Hit like, subscribe, let's get into it. Alright, let's have a fast refresher for anyone new to the Domino Theory. Jay Claver's Domino Theory goes like this: oil spikes, inflation heats up, Japan tightens, carry trades unwind, treasuries get sold, stablecoins feel pressure, crypto shakes, and banks go hunting for fast, neutral settlement asset. That's the full chain, and XRP fits right at the end of it: fast, efficient, and built for stressed financial plumbing. Let's walk through what's unfolding right now. Oil is the first domino, and it's already fallen. Brent crude breaking toward $100 is a massive macro signal, up 40% from last year's lows. Import-dependent countries, Japan, India, Europe, feel that pain immediately. Higher costs, higher inflation, weaker currencies, plus the Strait of Hormuz tensions, not helping. This is exactly what Claver predicted: high oil, tighter global money, rising market stress. It's early, but it's here. The next domino is Japan. The Bank of Japan just held at 0.75%, the highest in 30 years. Meanwhile, the yen is flirting with 160 per dollar. That's dangerous territory. For decades, cheap yen funded global markets. The yen carry trade. But now, oil's expensive. Imports cost more. Inflation is ticking up. And a weak yen makes everything worse. If Japan has to raise rates again, global money could rush home fast. That unwind would shake every market, including crypto. We're not at the breaking point yet, but the tension is very real. If Japan tips, the next dominoes are treasuries and then stablecoins. When investors de-risk, they dump treasuries. That liquidity often moves into stablecoins, especially USDT. But when conditions get shaky, people start asking questions about reserves. And because stablecoins power most crypto trading, even a small wobble can hurt the entire ecosystem. That's where XRP shines. No reserves to question, no centralized failure point. Just a fast, neutral settlement layer. Exactly what's needed during financial stress. Let's talk utility. Real utility. XRP settles in 3 to 5 seconds, not minutes, not hours, seconds, costs fractions of a penny, scales without congestion, no surprise fees, no bottlenecks. It's compatible with modern banking standards, ISO 2022, enterprise-grade rails. Whether the future is CBDCs, stablecoins, bank tokens, or real-world asset tokenization, XRP doesn't compete with those systems. It connects them. The neutral layer, the bridge, the universal translator for value, fast, cheap, final. And this isn't theoretical anymore, let's talk real progress. Ripple's partnerships heading into 2025-2026 are strong. Zan Bank, SEC Eurosys, Figment, plus custody, tokenization, and security agreements. XRPL also hit 2.7 million daily transactions on March 11th. That's not hope, that's usage. Banks testing modern settlement rails want something fast and reliable. XRPL is already built for it. Price always lags infrastructure, but the building is happening now. Now here's the big one: supply. People see 56 billion XRP circulating supply and assume that's the float. Nope, here's how it really works. Each month, 1 billion XRP unlocks from escrow, but most is relocked immediately. Only 200-300 million on average enters real circulation, and even that doesn't all go to exchanges. Some goes to institutions, market makers, payment corridors, pilot projects, treasury routing. So what is the true liquid float? Around 1.6 billion XRP on exchanges currently available, and dwindling fast. That's it. Everything else is in cold storage, retail, in cold storage, institutional, held by Ripple, or still in escrow. There is a common misconception amongst financial analysts and social influencers regarding this, and market cap calculations regarding crypto and potential price projections, where many get hung up on market cap and the astronomical valuations that would greatly overshadow the value of some entire global markets. So let's review what market cap is, what it is designed to identify, and why it's not suitable for crypto. Market cap has major limitations when it comes to crypto, especially when applied to XRP. Traditional market capitalization was designed for equity markets, where the price of a share represents proportional ownership of a company. In that context, market cap is a reasonable proxy for company valuation. XRP, however, is not an equity share of Ripple Labs. XRP is a separate digital asset with its own utility, ledger, and ecosystem. It does not represent ownership, voting rights, or access to Ripple's revenue or assets. Ripple's corporate valuation, currently around $50 billion, has little to no correlation with the market price of XRP. In crypto, market cap is simply circulating supply multiplied by the last traded price, which often moves based on thin liquidity. Thus, it can appear large without reflecting true economic value or the cost to acquire all tokens. This is why comparing XRP's market cap to Ripple's valuation, or assuming market cap limits XRP's potential price, is a category mistake. Market cap does not determine or restrict price, it is merely an output of it. Low float plus rising demand, fast price movement. The numbers speak for themselves. So yes, Claver's aggressive 2025 timeline didn't play out exactly. Rates stayed high, stablecoins held up, dominoes fell slower, but the logic remains solid. Oil is high, Japan is under stress, liquidity is tightening, XRPL usage is rising, tokenization is accelerating. The sequence is unfolding, just more gradually due to unforeseen and currently underway domestically and globally. 3 grounded reasons to stay optimistic. Number 1, real utility, millions of daily XRPL transactions, real payments, real tokenization. Number 2, real adoption, banks and fintechs onboarding now, not someday. Number 3, tight supply. A true float near 1.6 billion XRP means demand can move price quickly. Utility, adoption, supply, a powerful trio. Alright, Crypto Asset Catalyst subscribers. With oil near $100 a barrel and the Japanese rate steady at 0.75%, XRP's infrastructure strengthening and growing, and the true liquid supply sitting around just 1.6 billion tokens. These dominoes are lining up. And look, when it comes to XRP's long-term potential, we've all heard the $100, $200, $589, or $10,000. Are they guaranteed? No. Are they possible in the right macro setup? Absolutely. And it is more of a when than how. If the last decade taught us anything, it's this. Never underestimate crypto. No one believed Bitcoin would hit $100. Then no one believed it would hit $1,000, or $10,000, or $50,000, or $100,000 until it did. Every milestone looked impossible, until it wasn't. So whether XRP reaches $10, $100, or those higher scenarios people debate within months or years, it is a matter of time, and as the dominoes continue to fall, those prices get closer to reality than not. Tight supply plus real demand has changed markets before, and it can happen again. But today we are seeing a focus on true proven utility and real-world usability unfolding before our eyes. That is what sets it apart from previous cycles. This is new territory. So there is little historical perspective to help us navigate this new asset class. A guaranteed certainty is that XRP holders are the new age pioneers because they did not get in and stay in to get rich quick. They have the long-term vision, knowing what they hold is the future, for generations to come. Thanks for watching Crypto Asset Catalyst. Hit like, subscribe, and turn on notifications, and share this with someone who is tracking the macro story. See you in the next one.